Welcome back. Well, let's get in Prakash Diwan, who's here to help us out with some fundamental stock talk. Hi, Prakash. Good morning. Thanks a lot for joining in. Prakash, let's talk about the stock of the day. And the street was sniffing this for the last many months. There's going to be some kind of lifting with regard to that ban from the RBI on Kotak Mahindra Bank. And if you're looking at some kind of valuation comfort in comparison to what it used to trade at, well, that's Kotak Mahindra Bank yet again. It's been a relative underperformer. Do you think the stock is set to fire up from here on? Your view on the stock?
Good morning, Nigel. No, I definitely feel this is taking away a huge overhang from the stock. And you know what the numbers told us, the Q3 numbers that came through, very clearly gave an indication that the bank also is kind of anticipating this and poised to grow very rapidly from here. They managed very incrementally, little bit of improvement in NIMs. It was just 30 basis point. The credit side also was kind of muted, but better than the last quarter. I think what's happening out there is that this is also, coincided with a change in management. So a lot of the people who probably were to be put into the right places to command that kind of a growth has already been done. I'm quite positive on that. And remember, Kotak always has the advantage of other businesses contributing to its growth and not just the core banking side. So, and that's what's happened last quarter. So all said, and in the last 5 years, the earnings have probably doubled, but the stock hasn't. The stock is still where it used to be. So in the last 4-5 years, if you look at the earnings in absolute terms, that earning pool is actually doubled, but the stock is not. So I think the stock will get re-rated. Whether it happens, whether it fires up and gets re-rated or it's a gradual move, I don't know. But it probably should be in that 2250 zones quite soon. And when I say quite soon, it could probably be before the next quarter results come.
Prakash Diwan is with us. Prakash, so much happening, and I'll get to, I'll ask you what you like, but this Trump-Modi meeting tonight, and we'll hear something. Any stock level implications? Somebody was telling me that this Goldium International, for example, I mean, it's so idiosyncratic and so specific, stock specific. It had sold off very sharply, right? Yesterday it pulled back. But apparently if there are reciprocal tariffs, I mean, things like this, so it's very hard to discern. So we're not talking about big sectors, right? But individual small things, there are listed plays here. Anything comes to your mind?
I don't have that sense of, ability to accurately predict what's going to be the impact on stocks, because there's absolutely no indication on what the discussion is going to be around, Prashant. But what's going to be important for the market perspective from this meet is let this meet get done. Whatever needs to come through in terms of outcome, that needs to be out, and we have to move on. Otherwise, this is the fear of this tariff thing on what's going to happen to India and how things are going to pan out is much bigger than the real thing itself. So I'm actually waiting for this need to be done with and move on, because that will give us more clarity in terms of whatever needs to get damaged, whatever needs to get resuscitated, that will happen. So not to worry too much about it, but the stock specific thing will happen subsequently for sure.
All right. Let's talk about a company that we discussed in the past, Welspun Corp. That's not corrected at all, Prakash. I think that's the one that you had spoken about, and that could be a potential beneficiary if there are further tariffs. The last quarter's numbers weren't great, but the street appears is looking ahead because the stock is not corrected. It's closer to the 52-week high. Your take on this one?
No, absolutely. This is because it also has facilities within the US, right, which can kind of find a way around on tariffs for imports from India and all. But more importantly, the underlying utilities where Welspun Corp is supplying, those the kind of orders that are coming are very real and they're very translatable within a very short span of 12 to 18 months. So that's the reason why the stock has that salience. And I can tell you, as the order execution builds up this quarter, we didn't see anything, but Q4 has a significant pipeline that is likely. The call was very encouraging. My sense is this will probably be something which people will find on the way back into India to be investing into. Because now you have to look at the list of stocks which people will invest into in the second wave of infusion. Not, the same old stocks will not do well in all probability, at least not all of them. So these are the names that you'll have to kind of start identifying. But very positive on this, Nigel, as you rightly said.
Okay, and any of these PSU metal names that you're liking, Nalco, SAIL. SAIL, after a while, I saw a positive reaction post the numbers, and I think now the street is
Yeah.
content with, you deliver inline numbers, we're okay with it. You reduce debt by some margin as well, you're okay with. Any view on the stock? 105 rupees is what SAIL is at, and Nalco is, I think, 190 or thereabouts.
No, so Nalco continues to be my preferred pick for obvious reason. We've seen the commentary corroborates with this view that alumina doesn't need to be at a scorching level to make money for them. The capacities that have been built itself is going to kind of help them grow organically, and the operating leverage comes in. It's already started to appear, right? In the quarterly numbers, you could see that. My sense is once the EBITDA goes to about 1.8 times of where it was last year, the street will kind of see some visibility of that being continuing. So that's where the if you look at the stock behavior, it will probably be very different than the business growth. The business growth, in spite of ups and downs, in spite of this tariff regime, seems to be quite in place because the demand from China is not actually tempered down as much as people thought. The prices have. That's because of logistics and so many other things. But my sense is the business growth will continue for at least the next 12 to 18 months for sure. And then somewhere the stock has to get re-rated and kind of catch up. So that's the theme out there. But very, very clearly, that's probably the preferred pick within the metal space.
Okay, got it. Nalco.
Otherwise, Prakash, I mean, anything else? Tilaknagar Industries, for example, I don't know if you have a view from 450 to 250 in about 3 sessions flat. Any thoughts here?
No, I think this is on the back of, I mean, not entirely, but quite significantly attributable to this case that they're fighting against allied lenders. ABD and Tilaknagar have this major thing going in terms of the use of Mansion House and Savoy brands for whiskies, which is going to take away a lot of the wind out of their sails if that actually happens, if the ABD as a competitor is allowed to use these brands. So I think that's where the market is worried, because in an environment where it's hyper competitive, you lose out on some major brands. It's not so great news for the company. But value-wise, Tilaknagar does offer you a very good, floor of sorts where it is. So if you are okay and if you don't want to invest in the United Twins, then probably this is something which you could look at. But this industry is a bit far more complex than we think, even on a bottom-up basis. So I would recommend that people research and find out whether this risk reward is fine with them. But Tilaknagar does, at this level, offer you that comfort of buying into something which would only do better from it.
Prakash, thank you very much for joining in.